Welcome back to the Armchair Traders Investing Markets and Money podcast. And we're coming to you from the Resourcing Tomorrow conference in London. And I have Chris Doornbos joining us, who is the CEO and president of E3 Lithium, to talk a little bit more about lithium mining and the lithium market. So welcome to the podcast.
Yeah, thank you for having me.
So to start off with, can you give us a little bit of an overview, some background on E3 Lithium, the company?
Yeah, sure. So E3 is a lithium development company based in Calgary, Alberta. We're developing a asset that was discovered in 1947 for oil. We're repurposing that historic Alberta asset that produced oil for many, many years into become a lithium producing aquifer. And so we're in the direct extraction space. So we extract lithium from a salty water that we pull out of this aquifer. And fundamentally, that is the thesis of the formation of the company, the foundation of what we've built. On top of that, we layered in direct extraction technology. So the ability to extract the lithium from the brines. We've been developing that technology since 2016. And now looking to pilot and demonstrate that, obviously, through the various stages of commercialization. So the company's come a long way. When we first started the company in 2016, we had a handful of permits. We've since developed one of the world's leading resources. We've got 16 million tons measured and indicated LCE, which is 5 times more than the rest of Canada's lithium resources put together.
Well, that's quite a monster. And you were talking about the technology. Is that proprietary technology that you guys have been working on?
Yeah, it's a bit of a mixture. So we have our own proprietary extraction technology that we've developed in-house. We have also started to use a mixture of our process design with a third-party technology as well, which is basically the sorbent, the chemical that you use to do the extraction. The biggest challenge is scaling up the manufacturing of the material. And there are companies now in this world, this has been a big change over the past couple of years. There are companies now in this world that produce these materials in large quantities. So it means you can de-risk the whole project by simply buying them. And so we don't have to go through the whole scale up of manufacturing of sorbent to scale up manufacturing of lithium. Now we can focus on just scaling up our lithium business.
Understood. And how far along with you, as we sit here, December 2024, are you with the project?
So we put out our pre-feasibility study in June, July of this year. That outlined a $3.7 billion NPV for a project operating to produce 32,000 tons of lithium hydroxide. So that was a huge milestone. Obviously, this is one of the first projects to get to this stage in the direct extraction space. Lithium is still fairly new as a commodity. All of the lithium we need to build for this world, for the electrification, has to come from either an expansion of an existing resource or new resources entirely. So there's a lot of investment that needs to go into the space to ramp up the production we need. And E3 is on the forefront. We're the tip of the spear, definitely in Canada. We're one of the few in the world in terms of our time frame to get to commercial. So getting that out, demonstrating the value of this project at that level of accuracy, very important for us. And so next is obviously going through feasibility, demonstration, and a bunch of other things to continue to advance this project with the goal of building a facility that makes lithium in Alberta. But we're also looking, and we can talk about this as well, to build a battery ecosystem. We actually want to fully climb the vertical and produce a battery as well in the province.
So this is seems quite unusual for a miner to actually be thinking about, such a vertical. I mean, can you tell us a little bit more about the infrastructure around the project and what you've been looking at there?
Yeah, I think it's one of the things that sets us apart and why we can climb that vertical. So we don't mine, we brine. So we extract lithium from brine resources, which fundamentally changes how we do things. From an ESG perspective, just from an operational logistics perspective. So being in Alberta, this produces fluids very similar to conventional oil that has dominated the province's economics for the past 70 years. In fact, in this reservoir that we're looking to produce lithium out of, there are 4,000 drill holes for oil and gas exploration and development. So it's very well understood. We're in the heartland of Alberta's conventional oil industry, so we have access to power. We just announced a couple of weeks ago our plant site location, and if you go to that announcement, you'll see that there's a 240 kV power line 100 meters from the project site. So right off of about a kilometer away from a 2-lane paved highway, about 15 kilometers from rail. So we have all of the infrastructure locally, and because we operate like oil and gas, we can use the same skill set of people that exist in Alberta. So our operators of our facility will drive from their homes to operate the plant. The drillers who will put the wells in for us drill these exact same wells in this aquifer for oil and gas in their past, and drill exactly the same wells in other areas for other parts of the stratigraphic sequence. So the skill set's here in Alberta. We have the infrastructure in Alberta, and it really does set it apart. The other big thing that all leads to is the permitting. We permit under the same regulator that regulates oil and gas. And because this is just wells and pipelines and a facility, it looks very similar to an oil and gas operation, we're able to use that same permitting system. And that's now in law. And what it is very streamlined and very transparent. And probably will move through the process faster than most of the lithium comparables, simply because of how organized and now transparent the permitting process is in Alberta. And it's stakeholder first. And we've been out in the area talking to our stakeholders since the spring about this project, about what we want to do, because stakeholder buy-in accelerates the process. And so we're working with our local, which mostly are farmers in the area that own the farmland around us, and working with them to understand what the facility is going to look like and what it's going to mean for the economy and for them as well.
Understood. And I guess they're used to the oil industry being around there anyway, so it's not like it's a hugely disruptive for them.
No, the social license is well established for sure. And what we're doing is very similar to other things that have been done in Alberta. And that does help, because when we're going into the landowners, we're saying, this is what we're going to do, the majority of what we're talking about, they already have seen and understand.
Gotcha. And was it also, you were able to benefit from a lot of that data that was already available about the legacy oil drilling and legacy oil exploration in Alberta when you were looking for this lithium project?
Well, exactly. After a year of drilling a well, for example, all of the data that was collected from the drilling of that well, geological data, reservoir data, is made public by the company that drilled it. That's by law in Alberta. So we have access to all of the data from all of the drilling that's occurred in this area. And that's how we were able to put this together. When we first started it, we were able to understand how big this resource was without having to do any drilling, because we could accumulate all this information and put our model together. And so we knew fundamentally how big the opportunity was in Alberta when we started. What we needed to do at that time was develop the technology around the extraction side. And now that that's progressed very, very far, we've significantly de-risked the entire project from that standpoint.
Excellent. And I mean, we're sitting here December 2024. What are your plans looking ahead for the project?
So right now, we obviously feasibility. We've done a couple of changes. So we came out with a 32,000 ton lithium hydroxide plant. What we're likely going to do is build that in phases. And we're gonna put more information about this to the market in the new year. The engineering team's been going through and looking at how the equipment breaks up to build this in phases. And so if you look at our pre-feasibility study, we talk about 10 DLE trains. So we're gonna break it down to either 3 or 4 DLE trains and then build that into the first phase of the plant. That reduces the capital. The other thing that we've done is we've decided to go to carbonate. So the plant and the process flow sheet said carbonate, and then we convert the carbonate into hydroxide. But we've decided that given the market shift a little bit to more mid-nickel cathode and LFP cells, there's actually not a lot of available free trade carbonate in North America. So we see it as a good opportunity, and it's actually a lot cheaper for us to produce carbonate. It's a lot less tricky to handle. You can ship it further distances. It's easier to find the qualified, to meet qualification specifications on it. So it's just a simpler product all around for us to generate, because most hard rock projects dissolve their hard rock concentrate into sulfuric acid, make a lithium sulfate, then they have to clean that up, and then that is converted to lithium hydroxide. So, and most of the lithium in the world that's come on stream in the last, say, 5 years has been Australian spodumene, and being converted in places like China, and that gets converted to hydroxide. So there's this big increase in lithium hydroxide in the world, and not so much in the carbonate. And so I think that there's a good reason for us to shift, and that also reduces the capital. And right now, the biggest thing that E3 will do in terms of accomplishing the project, getting it sort of up and running, our biggest task is going to be project financing, getting the capital to build the plant. So reducing the risk on the project and reducing the capital on the project will help us get through that process a bit quicker and get the facility built a bit quicker.
Okay, understood. And in terms of Alberta, I mean, you've touched on this already, but the lithium brine in Alberta has sort of almost unique characteristics that make it quite valuable, doesn't it?
Well, I mean, it's in this Leduc aquifer, which spans from pretty much Calgary all the way north through the province. There's over 60 million tons of resource under 43101 through the various different companies. And so it's an absolutely massive opportunity to bring Alberta into the lithium world and become a lithium jurisdiction unto itself. It's nascent today. We're leading the charge, but there are other companies out there also trying to develop this industry in Alberta. And the Alberta government's been very supportive of this. We've gotten $5 million just recently from an Alberta funding agency. We've gotten $2 million previous through Alberta Innovates. So there's lots of desire, I think, from the provincial government to see lithium get produced because it puts people to work. And it's another commodity. We diversify the economy because we're producing something that's not oil, so that it has a different market, and that helps diversify. So, and then the brine, it's a very consistent product. And this is the challenge across the brine space, is that a lot of the brines have variable grades and variable stratigraphic units, depending where you are. This is one sequence, very consistent grade across the whole thing, which means your plant can be built with tighter tolerances and will produce more optimized flow in terms of lithium coming out of it than something that has a variability in grade. Because your grade in the Leduc is 75 and it's flat across the whole thing. And that'll have a big part to play to the success of how the plant will operate. When you turn the key to that plant and it turns on and it operates, it better work. You spend all this money, you need it to work. And so any mineral processing expert will tell you feed quality and feed consistency is absolutely paramount to a facility operating. So that's a huge advantage to us. And unlike a hard rock mining as well, when you're bringing feed from all these different places and it all has slightly different variations in the grade, this brine comes out of the aquifer very consistent chemistry wise.
Yeah, no, that sounds fantastic. Slightly more prosaically, the financials on the company, how's it looking at the moment?
Yeah, look, we've got our last financials. If you look at the Q3 24, $23 million of cash in the bank. We also have about $24 million in provincial and federal grants that we're drawing down on. There's a lot of additional grants that are out there in the ecosystem as well that we think we might be applicable to the project and therefore have a chance of being able to receive. And the reason that the government's funding these projects is that we build a new industry in Alberta. So we've been the recipient of a lot of funds over the course of our history, because if the technology gets going and we create an industry, it unlocks it for everybody else. And so that is sort of fundamental to this success, and also helps E3 and our shareholders, because there's a significant amount of non-dilutive funding. It's probably about 40 cents on the dollar of every dollar we spend is non-dilutive. And that does help an investment when people look at how far your money goes when you put it into E3. It's why we've also been able to be very prudent. We've only raised every 2.5 years or so. And the reason for that is that we've been able to be good stewards of capital and get through to major milestones. And we raised in late 2020, early 2021, and that funded us all the way through to our pilot plant. We got the pilot plant up and running, and it demonstrates success. We traded up to $5.50, and we raised $23 million at $3.55. That was our last raise. That was a year and a bit ago. So we've got lots of runway now with the grants to get us through to demonstration, to get most of the feasibility study done, to advance this project to other major milestones. And our goal right now is to not have to dilute the company further. That's a goal. There's lots of opportunities for support to get this industry going through either strategic investments from, and one of our big goals for 2025 is to bring in a strategic. We can talk about that. But funds through that or through government or through offtake should support us through the development phases. And there is a potential where we don't have to go back to the market to raise capital. Obviously we have a lot of work to do and so there's still a potential we might, but the goal is that we don't have to. And it's not often that you can set that goal. It's just because of how critical this element is because how short a supply it is, because I think there's gonna be a growing trend of onshoring of, especially in North America, of onshoring local supply of these minerals, and we simply don't have enough. So we need to get good quality products, good jurisdictional lithium out the door.
Would you say there's a sense of urgency on the part of federal and provincial governments in Canada to get lithium on stream sooner rather than later?
I think from a local supply perspective, yeah, I think there's some concern. I mean, we just sit in this ecosystem. We don't derive policy, either Canadian federal policy or US federal policy by a long mile. But we are, obviously as any company is, we follow the policy waves that get put in place. And there's been a big shift over the past 3 years of this sort of enabling local supply. Because right now, if you look at the Chinese ecosystem, they started building batteries, like CATL started in 2011. They've been building batteries for 13, 14 years, and they make the best, cheapest cells on the market today. And they're excellent quality. So that is where we sit. They also produce the majority of the world's battery material. So not the molecules themselves, but the refining into the battery product. So E3 will make a battery product. We don't make a precursor. So that helps us because we don't have to find a processing system. We don't have to find a converter or someone to process our lithium. We will make the battery quality product, salts, at our facility. So that helps us move this thing forward. But I think that my prediction is there's going to be an increasing growing trend to build a local supply chain in the future with the current government. And I think that bodes well for a lot of companies because it is hard for a company like us to build from a small company to become a producing asset. Generally, small companies will sell to a big company. And while that's always a possibility, you can't necessarily predict when you might get a takeover bid. I think that there's very few opportunities like this where we can actually build this thing ourselves. And we can go through all the phases, and we have a path and a plan to do that should enable E3 to be successful, get the project financing, and get this thing in operation. And once that happens, we can build 4 more of these plants. That's the prediction right now that we believe the aquifer can support between all of our projects is about 120 to 150,000 tons a year of lithium battery products in terms of the salt, which would be a massive. When you look around at the lithium companies, there's very few that produce that amount of lithium today. So we'd be a very big player. Now, obviously that takes time, that takes money. That's our sort of blue sky potential as we scale and grow, but we have that scale potential, and that's not common. And I think that garners us to get the support we have. And I think it in my mind, it means that this asset's going to get developed because it's such a very good opportunity to support the growing battery demand, the battery ecosystem, the electrification that the world is going through, and to support that from a local supply perspective.
And I wanted to ask you, what's your impression of lithium demand in North America at the moment? I mean, how are you seeing that?
I see, we're going to see a bit of a slowdown, I think, on the total sales of electric vehicles, and that's a big driver for batteries. But the battery ecosystem is coming. And I think that the path towards electrification is coming. You talk about all of the energy demands that the world is going to need in the future. It's electricity. It's why nuclear is coming back into the fold. A lot of people talking about this. We're still building out. So the most readily available energy source on the planet is the sun. Capturing it with solar, there's obviously challenges with it, but it's the cheapest energy source we have on the planet. All of these things that we want to move towards in terms of using electricity in a mobile sense or energy storage all require a very efficient battery. And the amount of industry that it creates, you think of one of the reasons Tesla's been so successful, why they're able to do things like go into the robotics field, is that they don't have to find batteries. They have their power source, very efficient power source for all of these applications. And you look at your phone, it's a primary example. The computing power in your phone is due to 2 things: the size of the chips and the amount of processing power in a chip, and the amount of power available in your phone. And that power is because of the lithium-ion battery. If it weren't for that, the phone would be much bigger. Think of the cell phones in the 90s. They look like giant books, right? They're like bricks. And most of that phone was a battery, right? It was a lead acid battery. And now your phones are the size they are. They fit in your pocket because of the lithium ion battery, at least at half of it. So that advantage of a light, very powerful battery is going to move through the whole industry. And so that is coming. I think there's very little doubt. And again, we're just a player in the space. We follow all the people who predict the battery uptake and the electrification theme and where everything's going. And from everything that we see, while demand in EVs might be a bit slow, the ecosystem still is growing. So it's a matter of, I guess, when and not if the full thing happens. And I think when you add into that this growing trend to onshore and bring critical minerals, I mean, the United States produces 4,000 tons of lithium internal to the United States today, and we need millions of tons in the future. So there's a huge deficit in terms of local supply. Canada produces only spodumene concentrate, and it's not processed in Canada, it goes elsewhere. So we don't have a local supply built today. So we need to build it. And I think that that's where projects like ours are going to be able to play a big part.
That sounds like an opportunity for you. And just finally, I wanted to ask you about your impression of the M&A activity in the lithium sector. I mean, what's that looking like in North America?
I mean, obviously some big moves as of late. Equinor investing in a project in the States, Rio Tinto buying Arcadium, and really moving into the lithium in a big way as a major mining company. General Motors joint venturing into a mineral project in Nevada. So, and that's all been in the last month or so, month and a half. So you're seeing a lot of movement into this space. Generally M&A happens, these big companies are very sophisticated, they're patient, and M&A happens when they see the bottom and they see this is the best price they can get for it. The price tag for Arcadium was $6.7 billion. Their valuation was significantly higher than that when they IPO'd out of FMC. I would say right now that there's a good heartbeat back into the lithium industry, into the battery space. Obviously, we'll wait to see what happens south of the border for us, but I think that we're going to see more of this happen. And I think it's a good sign that you are near the bottom because these companies are making their moves. And it usually starts at the top. I mean, the big moves happen, right? And then that filters down to the smaller and small companies. We're not necessarily looking to get bought out today, but we are going to be actively looking for a strategic partner in the new year. And what we're looking for is someone to come in on the project level. And the reason for that is that we can build multiple projects. So giving a percentage of our first project away enables that business to get up and running. We lose some share in that, but we enable our business to be successful. And then we can go off after that and build our own processing facilities. And so we've done all the legwork on the engineering. We're experts. My team are experts in direct extraction. And so we have all of the hallmarks that a strategic is looking for to invest in a good team, invest in a good company. And so we're going to launch a process in the year to go find a strategic. And that could be a myriad of different things. We're pretty open to the possibilities of how that might come in. And we sort of see it maybe as a consortium of a couple different things. But getting that project investment in place this next year is important. And then that helps with obviously de-risking the project for project financing. ITCs that have come into play in Canada are very important as well. They potentially are a payback of up to 30% of your capital. And the majority of our capital will apply to the ITC in Canada. So that's going to be very important for the banks to de-risks again. And really what we're trying to do between now and when we start building this plant is de-risk it enough that we can get financing and investment into it to build it. And so that's all of the work we're doing is that. And that's why the demonstration facility that we have planned that's currently being constructed, we hope to operate that in July. That fundamentally is de-risking the project from multiple levels. We can give battery grade products, battery grade carbonate to our potential customers. They can evaluate that. We can start pre-qualification. We test a lot of the process operators from the DLE and downstream to carbonate to ensure that they work the way we expect them to do at that scale. That helps de-risk it. And so when a bank is looking at investing us or a strategic is looking at investing us, they can come out to that. And we can show them exactly what we mean when you say, this unit that we built here is a mock of the commercial facility, and here's why. They can see that for themselves and evaluate. So all of that, all of these pieces build the foundation of, a financing that builds the actual project itself.
And when you talk about strategic investor, I mean, what's your ideal partner? What would an ideal partner look like for you guys next year?
I think that we sort of see it as 4 categories: OEM, battery, oil and gas, and mining. Those are the industries we've seen in this space. Now, there's obviously smaller potentials out there as well that we're talking to, but in terms of categories, those are the 4 main categories. Oil and gas makes a lot of sense for direct extraction projects because we operate like oil and gas, so they can understand how we do our business. I think a little bit better than a mining company who's used to digging up a rock and the processing that it would take to do that. So there's a lot more similarities to the oil and gas space. But you're seeing folks like Rio. I mean, once the acquisition is complete, they're going to be a brine producing company in Argentina. So they'll, and Arcadium are experts, and they're experts at making hydroxide. Their conversion facility in Bessemer City makes a large amount of lithium hydroxide every day. They know what they're doing. So I think that helps bolster that understanding. And I think you're seeing more and more of that happen, right? As these companies, oil and gas companies getting in, Exxon's in the United States, they've come up the learning curve very quickly on understanding how to produce. And they're going to be a DLE producer as well in Arkansas. So all of these things, I think, validate. You see Equinor. They're going to be the first commercial DLE producer here probably quite shortly. We're anticipating they're commissioning their facility right now. And that's a big move for direct extraction facilities on the grand scale, because that'll be the first plant operating a commercial DLE project ex-China. And so following that story has been very exciting to see them and their success. And then obviously, that will garner success and validation, I think, more than anything to the broader direct extraction industry.
No, that sounds really exciting, and sounds like you guys are onto something there. Thank you very much indeed for joining us on the podcast, Chris, today. I really appreciate it.
Yeah, thanks for having me on.
Thanks a lot.